I'm Angeline and welcome to Beat the Street, the show that gives you the tradable news and data you need ahead of the Wall Street Open. Now, coming up, a market pause, equity investors hitting that pause button, taking a breather ahead of that jobs report, and two public appearances from Fed Chairman Jerome Powell. Apple takes on the EU, or rather vice versa. The EU slapped Apple with an antitrust fine in the Spotify case. More on that in just a moment. And a Bitcoin bonanza. Bitcoin busts above $65,000 is a record high, just lurking beyond. We'll look at those levels. Now, good afternoon. I'm Angeline Ong, and welcome to this edition of Beat the Street, not long before Wall Street starts trading. And of course, we've kicked off the month of March, and with quite a bit of va-va-voom as well, because markets, even though they've stopped slightly for a breather ahead of those key reports and also Powell's multiple speeches, they are continuing their melt up, and just showing you the US 500 as well, and showing you the pretty much the 15-minute chart here, if I may, because as you can see that there is that indication of that breather. But look at where we have been with the S&P 500 and also the Nasdaq, which is a US Tech 100 on the IG platform. Plenty of economic news this week as well that may change the mood music, but for now, the party seems like it's continuing. And we're joined now by Chris Vecchio, live from New York, from Tasty Live, part of IG Group as well. Chris, it looks like all this excitement in the markets, there seems to be no stopping it. Do we think, and from those people that you've been speaking to, that pretty much this is FOMO after those that sat on the benches from around October?
It definitely feels that way. I'm seeing a lot of people substantiate their bearish points of view with the market's gone too far too fast. And listen, we've been on a record run. We really don't see many rallies like what we've just seen that often in history. So on one hand, that's true. On the other hand, a lot of people that say those kind of things are people that weren't trading the market long the entire time. There's a sense that they've missed out. And so until people like that stop saying that this is the top, it's time for the rally to be finished, until they capitulate, this is a market that still, quite frankly, has legs. A lot of people are commenting that this is silly price action, for lack of a better phrase. But breadth is good. Advanced declining ratio last week was above 2 at points. When you take a look at the rotation from mega cap into value, from large cap into small cap, those are all hallmark signs of a market that's getting ready to continue to rally. And more importantly, the sector rotation is great. Cyclicals, consumer discretionary, home builders, chips, biotech, all the things that you'd like to see in a high beta type of move are continuing to lead the way. That said, right now, this has been a tremendous rally. This is very far, very quickly. We've been trading it long for a lot of the time, so it's not necessarily a problem. I'm still long the S&P 500, short Russell puts, long NASDAQ calls, and it's all working out swimmingly. And until that changes, there's no reason not to do those kind of things. I think the important thing for traders to understand, Angeline, is that your goal is not, and your job is not to call the tops and bottoms. Your job is to identify the conditions in the market, if it's up, down, or sideways, and trade within that trend until that trend breaks. That may mean you're able to go back to the same trade 2, 3, 4 times in a row, and it works. And on that fifth iteration, you take a loser. But if you can go 2, 3 trades in a row winning, and then your fourth or fifth is a loss, and you're winning 66%, 75%, 80% of the time, that's success. So no reason to overthink this. The market's still going up. As a trader, we're trading the direction that it's heading. Right now, it's still up. And when it stops, then it becomes appropriate to be bearish.
100%, Chris, is all about that reward risk ratio, isn't it? What is going to change the mood of this party, though? Do you think it's going to be those remarks by Powell this week, and or could it be the jobs number that we're waiting on?
It could be both. This week, the Humphrey Hawkins testimony by Fed Chair Powell, both in front of the Senate and the House Financial Services Committee, obviously has a chance to move market Wednesday, Thursday. The NFP report on Friday, another caper as well. Look, the JP Morgan Fed Speak Index has actually been trending a little bit more dovish here in recent weeks. People think that because equity markets are trading at all-time highs, this means that the Fed has to be a little bit more hawkish than they otherwise would want to be. But the fact is the Fed doesn't really care about the stock market. We know it's the unofficial third mandate. But right now they're focusing on inflation and the jobs market, plain and simple, both of which are very strong. So will Powell tell us that rate cuts are coming? No, because the data doesn't support that for this meeting this month. Will he tell us anything new? I would be surprised. The calendar is a real consideration here the next few months from the Federal Reserve. Once you get through June, you have July, and then that's really it until November. August is Jackson Hole. September is the meeting prior to the presidential election, which is very historically rare for the Fed to do anything at that meeting. And then, of course, October, there is no meeting. So if you don't get a cut by, we'll call it July, you really don't have the opportunity to cut rates until the very, very tail end of the year. The Fed can't make any promises that they're not going to do anything one way or the other. And more importantly, it's a testimony on Capitol Hill. When has the Federal Reserve ever said anything under oath that stipulates that Fed policy is going to change? So I think it's non-farm payrolls this week to watch out for. Plain and simple, that gives us a small window with which we can operate and rally higher. And maybe non-farm payrolls is the pin that pricks this growing bubble.
Thanks very much, Chris. We'll definitely be getting you back on this time next week or even sooner, perhaps, if we get those data points come through quite controversially as we're looking out for that thing that pricks, as you rightly say, the bubble. Just a quick look at the NASDAQ for you, because this is a daily chart. But if I change this to a 15-minute chart or even like an intraday chart, you'll soon see that NASDAQ kicked off March by hitting an intraday all-time high on Friday, also closing at its highest level for the second day. Similarly, we're seeing new highs for the US 500 as well. And following the moves on the S&P 500 is IG's Axel Rudolph.
Well, I thought I'd have a look at the S&P 500 because, after all, it's made yet another record high. But it's getting to a stage now where technically perhaps we might see some sort of corrective move happening over the next week or so. After all, we've got Jerome Powell's testimony, and we also have non-farm payrolls out on Friday. So perhaps that will change things a bit from this currently very, very strong, still bullish momentum that we're seeing in the index. And as you can see here on the daily chart, we have what looks like a slight wedge formation forming here. Now, that in itself doesn't mean much, and we could continue to rise. But if you also look at the bottom of the chart, you've got the relative strength index, and it did last week show negative divergence, which was then voided by the upsurge we saw on Friday to new record highs. But as long as we don't take out the highs on the oscillator compared to the ones we saw back at the end of January and the beginning of February, it may still turn out to be a triple negative divergence. So what I'm basically saying is I am no longer comfortable buying the S&P 500 at these levels on a short-term basis, because what I expect might happen is something similar to what happened at the end of last week, the week before, I should say, when we had this rise to 5,111 and then trailed off. And the question this time around is, if that were to happen, would we just trail off for a few days and then continue our ascent, or would we fall through the low seen on Thursday at 5,052? Because if that were to happen, and if we were to fall through the October to March uptrend line, which currently can be seen around 5,029, then a top formation may indeed be formed. But these are just speculation at the moment. For the time being, the trend is your friend, and that's still pointing higher.
Thanks very much, Axel. We're sure to watch out for a breakthrough in that trend, or whether there's a confirmation in the next session or so. One of the biggest stories that we're watching for you is Apple. The EU has hit Apple with an almost $2 billion antitrust fine. This is for preventing Spotify and others from informing users of payment options outside its app store. Apple is set to challenge this in court, this fine in court, but Margaret Vestager, the EU antitrust chief, she says, for a decade, Apple abused its dominant position in the market for the distribution of music streaming apps through the App Store. Now, just looking at Apple's chart for you to see if there's reaction, we are seeing on the 2-hourly chart that it is ticking lower. Apple is, of course, an all-session stock on the IG platform. Let's take a closer view this time on the 15-minute chart. As you can see there, I've put the 9 a.m. line there for you just to show the move since you could start trading all sessions on the IG platform. It is ticking lower ahead of the cash open. Now, we're also keeping an eye on American Airlines. For this is simply because we are waiting on American to update investors. This is its first investor conference since the pandemic. I know, hard to believe, right? But with everything that's been going on with shortages in terms of staff and also what's been happening geopolitics-wise, it's not hard to believe that this is the first time it's actually especially addressing its biggest investors. This is the hourly chart for you there as we count down to the cash open. And one other stock that is also all sessions, I believe, is Lyft. That's right, it is all sessions. Just pulling that up for you because the ride-hailing firm is ticking higher. As you can see there, this is the hourly chart. And as you can see from my line there, it is ticking higher all sessions after RBC Capital Markets upgraded the rating on the stock to outperform from sector perform. Just a quick check on retail now, because we've got Macy's news there that Investor Group has sweetened its takeover. This is take private bid over the weekend, valuing Macy's at around $6.6 billion. They raised their offer prices as Ark House Management and Brigade Capital to $24 per share for the remaining stake, which they don't already own, from $21 per share. Also pulling up Target, if I may. Target is another big retailer, not all sessions, might I add, but actually you can trade this when the cash session opens. Just pulling up the 15-minute chart so you can see what's been happening in the last session or Friday session as well. Target says it expects to post a fall in holiday quarter same-store sales, its third consecutive quarterly drop when it reports results on Tuesday. Don't forget, companies like Target and many other retailers in the US have been coming up to strong competition from online retailers, especially from China like Pinduoduo and Temu or Temu as well. And last but not least, let's have a quick check on oil and gas prices, because I can tell you that OPEC Plus members agreed on Sunday to extend the voluntary oil output cuts of 2.2 million barrels per day into the second quarter. Here's a look at US crude for you as we count down to open. This is the 15-minute chart, and as you can see there, it is ticking slightly higher. Investors becoming slightly less bearish about the outlook for oil and gas, as well as US shale producers scale back drilling. Saudi Arabia and OPEC Plus allies, as I mentioned earlier, also extending their own output cuts for a further few months. Now, before we go, let's have a quick look at Wall Street, so Dow Jones Industrials, ahead of a big week, because we've got not just Fed Jerome Powell speaking a number of times, but we also have, of course, that key jobs report on Friday. And that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insights, follow me on @IGCom or @Angeline Ong on Twitter. This is IGTV.